Yo guys, it's your boy Ghost. We're back again. We're gonna be looking at something really amazing today. I'm really sorry I've not dropped a video in a while. Kind of be busy with basic life stuffs. So the topic of today is trade the market in 4 easy steps. So guys, I'm gonna make this very plain and clear because this is how I do it, and basically I found consistency over the years trading. So let's dive right into this now. What's the first thing we're looking out for? First thing we're looking out for is the directional bias of the trend, like of the market basically. So what I mean by this is that if the market is basically in an upward trend, you buy. If it's in a downward trend, you sell. So you don't do the opposite. You understand? Our advice: you don't counter trend trade if you don't know or if you don't have the right knowledge about it. It's better you stay with the trends, and even though you take a loss, at least you know you stick to the plan. So first of all, identifying the trend. And how do you identify the trend? It's very easy in understanding how to identify the trend. So I'll go like this. Hold on. If price keeps on making new highs, new lows, higher highs, new higher lows, new higher highs, new higher lows, then we are bullish. Then if price start making lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, so we are bearish. So once you start seeing price making highs and new highs and new highs and new highs, we're in an upward trend. Once you see price start making new lows to the downside, just know that we've changed the direction. So first of all, let's go and identify this in the markets now. So okay, now let's go. So basically, watch. So let's just take here as point of interest. Now if you look at this part of the market, you'd see that price has been going to the upside. You can see forming lows and highs, forming highs. Now from the new low, failure to continue to the upside, decided to form lower lows and lower highs, lower lows, lower highs, lower lows and lower highs. Now let's say you met the market in this condition here. Okay, yeah, so you've identified the trend and you've seen that the trend has changed its direction. So basically you're saying that you're going to the downside now. Let's say this was where you saw the market. Now what's the next thing we're looking out for now? The next thing we're going to be looking out for is look for broken resistance or support. So basically now, let's say you've seen this low here, this resistance, and this was like a nice resistance, and what the price actually do, price broke below it, which was this break, and now not just that, now it formed a high. Now once price has broken it, which is this, now you look for a retest, which is the third step. You look for a retest. Now, so where some people get it wrong is that they don't know where to enter. You understand? After maybe you've spot the structure, price has gone up, price has changed the structure, and price is about to go down. They don't know where to enter. That's the problem. They face difficulties in entering the market. You understand? But this is what I'll tell you today, and I'll show you how to do it. It's just very easy. You understand? So don't forget, guys, the first step, like I said, is identifying the trend. You've identified the trend. You've seen that price move from a bullish to a bearish trend. Now secondly, you've identified a broken resistance, which was here. Price broke this resistance and turned it to a support now to go down. Now it's the third step, which is retesting it, and price has retested it. Now entry, you have to enter with some confirmations. And what are those confirmations? Now when price comes to a resistant level or to your point of interest, which you want to enter from, you look out for price failing to continue to the upside. So you look out for price failing to continue to this side, and you start looking for price showing continuation to the downside. You understand? So now, like you see, you have a weak rejection here, you have a bearish candle, the next bearish candle, and you see that basically price is showing you that it cannot continue. Let's say in these 2 bearish candles now, you go down to a lower time frame, like let's say 2 hours, one step down, and if you go to 2 hours, there's something I want you to look at very properly. Now you see that price is still okay. Let me show you this. Okay, now this is it here. Now you see price went so strongly to the upside, and it is failing to continue. You see here, see this candle is failing to continue to the downside. So I will probably advise that you wait for the 4-hour time frame kind of bearish candle to the downside before you take your sales. Now you see that this bearish candle that went down is too much to the downside. You understand? It's like too much. So I'll probably advise maybe you could go to like 2 hours and look at this strong engulfing candle to the downside. Or if the best way you would have entered was with a let's say sell stop to the downside. Maybe after you see all this price action at the 4-hour time frame, you could just come here and have your sell stops and have your stop loss. Now people who have issues with placing stop loss, your stop loss should be right above the previous high. So let's say this. Then I normally like to use 1 to 2 risk reward ratio. Okay, so you have it here, 1 to 2. So basically you have your nice sell here. You understand? Very easy. I will show you guys in another kind of pair so you see what I'm saying. Let's just do let's say this pair, GBP card. Okay, let's just do GBP card. Now it's the same thing here. Let me show you again. Whenever you come to the market, identify the trend. Easy peasy. Now this kind of market is very choppy, you understand? So this is not what you want to be trading, you understand? So I will probably advise that you stick to a kind of trend like market, and this is what I mean by this. You see now, if you look at this, price is forming new highs and new lows, highs, lows, high, low, high, low. So you see price is forming new highs and lows. So now let's say, I don't want to use the best examples, but let's just use this one. Now let's say you identify that price broke out from this resistance here, from the previous higher low, which was here. You identify that, and you're waiting for price to come back and form new lows for you to take your buys, you understand? So what did price do? Price broke, price retested, and gave you an engulfing candle to the upside. So now, as price are giving you an engulfing candle to the upside, what you could do is that you could have your buy stops somewhere here. I love using buy stop order because I believe that once price gains that momentum to continue to the upside, we're good to go. So okay, hold on. So basically you have your stop right below here, below this whole stuff here. Then you target 2 times whatever you're risking. So you see, you still get to smash TP always. I would have loved to show you guys more entries, more setups. Okay, let's just do something. Let's go to another pair. Let's go to Euro. This is Euro USD. Okay, let's go to Euro USD. Now let me show you again. Price has changed structure from a bullish bias to a downward trend. As you can see, it has formed new lows here. So it has formed new lows here, and keeps on forming new lows. Now let's say you saw it break this whole resistance here, and you're expecting to take a sell towards here. Yeah, so all you have to do is, now you see price has formed the pattern. As you can see, it came the first time, and let's say you had your sell stop somewhere here, let's say somewhere below here, and you wanted to have your stop loss above here. Okay, let's say something like this. This is what you wanted to do. Have your sell stop somewhere below here. Now watch. This is how you'd have entered twice. Maybe you had your sell stop here and you got triggered in, and you enter, you hit your TP. Now this is how you would have gotten in second time. Now this is a neckline. If you look properly, there's a neckline here of this double top. Now once price must have broken it and retested it and give you a bearish candle to the downside. Now all you have to do is just basically get in at the last one here, have your stop above it here, and target 2 times whatever you're risking. So this is 2 times whatever you're risking. Yeah, so hold on, let me make it 2 times. Yeah, so basically you'll have gotten it second time. You understand? And you keep on doing this over and over and over. It's just understanding the trend, trying to follow the directional bias of the market, and understanding support and resistance. It's just that easy, guys. So I hope this video helped you understand how to trade the market in 4 easy steps. First of all, like I said, identify the trend. Secondly, after identifying the trend, you make sure you spot a broken resistance or a support. Then you look for a retest of that support or resistance that have been broken. Then your entry should be off normal price action, where price fails to continue to the direction it has been retesting to, and is showing you momentum off that direction to the downside. So that's all, guys. Thank you for watching. Please don't forget to like, share, and also drop a comment on what video you want me to make. Thank you. I appreciate it.